Okay, so what is up guys? Welcome back to another video. I'm sure you've been seeing everything going on the internet about Melvin Capital and GameStop and Wall Street Bets and Robinhood. And a lot of people probably don't understand what exactly is going on. So I'm trying to use this video to explain exactly what happened.
The God of Gods!
This story starts with something called short selling. What that basically means is you bet against the stock because you expect the company to fail. So for example, if maybe there's a business that still sells videotapes, nobody uses videotapes anymore, VHS is out of, like Blockbuster for example, you could bet against that company and say, okay, you know what, I think this company is going to fail, I think their stock is currently overpriced and they're going to tank over the next few months. And you bet against that stock and then you make a shit ton of money. That is basically what a lot of billionaire hedge fund managers have been doing for many years, and stuff like that is basically what caused the financial crash of 2008. But it gets worse. You see, sometime last year or towards the end of last year, somebody from Melvin Capital came out and say, I am not going to mention his name, but he came out and said, well, GameStop stocks are crap and I'm going to bet against this stock. And pretty much what happens when that happens is a bunch of other hedge fund managers bring in money and then they start to short sell this particular stock until it pretty much crashes and the company goes on the ground, and then they make a buttload of money from that. The problem though is they were not expecting that gamers were going to band together and decide that this was not cool. So a bunch of people on the subreddit Wall Street Bets decide, okay, you know what? We like GameStop, their business is reasonable, they sell game CDs and game keys, that's fairly reasonable. I mean, I personally still buy game CDs anyway, so we're just gonna take a bunch of money and buy a bunch of this stuff because we like this company, and we're going to keep the company alive, and we're going to hold those stocks until the people who tried to short the stock lose an infinite amount of money pretty much. It's a concept that's very hard to explain, but it's pretty simple when you think about it. So a bunch of bros decided to band together, start buying the GameStop stocks, AMC, BlackBerry, Nokia, and so on, but mostly GameStop, and the stock went through the roof. It skyrocketed. At some point, it was trading at around $240, if I'm correct. Maybe a little higher than that, but I'm not sure. The last time that I checked, the highest that it was around $240, which is absolutely ridiculous. Now, what happens now is Melvin Capital, that basically publicly came out to state that they were shorting this stock, are losing a bunch of money and they're bleeding really bad. So they start trying to get help to get out of their short position and, you know, just get out of GameStop pretty much and cut their losses essentially. But a lot of bros did not believe that they actually were out of the short position. So they kept on buying and they kept on holding, and pretty much people became overnight millionaires in this subreddit. There are people who basically went in on the GameStop stock and pretty much became multi-millionaires overnight. That has happened, and there's a lot of people posting updates of their gains, their daily gains, how many millions they've gained today on the subreddit for other people to see and be inspired by. Now, there's also a lot of people on the subreddit who are trying to inspire everyone else who is getting in to hold and not sell, because there's a temptation to sell when you see that the stock is high and you can quickly make a couple million. I mean, who wouldn't want to make a couple million very quickly before the stock comes crashing down, right? They want to hold until the end game so that they can make the maximum profit and then they get out of this stock. There's an argument that comes out and says, oh, is this not colluding? A bunch of people agreeing or deciding together to band together to buy a stock to inflate the price and make money from it. Then there's another argument that says, but this is exactly what the billionaire hedge fund managers have been doing for many years. So why is it okay for them to do that, but it's not okay for the regular person, the regular buyer, the regular trader to decide to do something like that? And both arguments are honestly very fair in my opinion. Yes, deciding to do something like that en masse to inflate the prices and make millions can be seen as collusion. And yes, this is exactly what Wall Street has been doing for many years, pretty much destroying entire companies without a second thought and making their wallets way too fat. So why is it a bad thing when regular people decide to do it as opposed to billionaire hedge fund managers? Then the story takes a turn. The stock is going up, the bros are holding, GameStop is saved, GameStop is making a shit ton of money for people, and then Robinhood steps in. Robinhood is an application that you basically use to trade stocks. You buy, you sell, yada yada yada. They decide that they're going to block you from being able to trade certain stocks. On top of that list is GameStop. And what that does is, because nobody is actually buying and holding the stock anymore, the price starts to fall. So what that sounds like to me is that Robinhood is taking sides with the hedge fund managers to try and help them cut the bleeding and pretty much help them gain some leverage and get them out of their positions so that they're not losing too much money anymore or too much money going forward. But there's also another argument to consider. The fact that something like Robinhood as an application has a lot of liability to its consumers. You have to think about the fact that, okay, at some point in the future, when this stock actually comes back crashing down, not everybody is going to make a win or going to make $1 million or a few bucks off of this sale. There's going to be people who make actual losses, actual life-changing, life-altering losses. When that happens, a bunch of people might then decide to band together and say, okay, you know what? We're going to mass lawsuit this company. And there's going to be like a class action saying, oh, Robinhood destroyed my life and took away my life savings. There's that argument, however, but what it looks like generally to the general public is that Robinhood is trying to limit this to help the hedge fund managers manage their losses, which to me sounds very unfair. And it's funny because as I remember it, Robinhood was a company that actually wanted people to trade freely, and the premise of their business was to make trading available to regular people like you and I, just regular people on the internet who just have a phone and an application and some internet and a little disposable income to actually invest and trade in stocks. They wanted us to do that. So we're doing that now, but they're trying to stop us from doing it because it's affecting some people. Kind of weird. But I hope this video has pretty much explained to you what exactly is going on with GameStop and the stock market right now, and why there's so much talk about it. There's some companies losing and there's some companies gaining. This entire thing started as a giant middle finger to one company and one hedge fund manager, and now it has grown into something that could pretty much change the future of stock investing. We don't know where we go from here, because now that we know that we can do this as a collective, what happens now? Peace?
The God of gods.